What's up, guys? Here is Ted from, I call this thing Bodies and Wicks, and it's regarding smart money. And today we're just going to do a quick lesson on why I think everybody's got the wrong idea about support levels. Okay, I've been seeing a lot of argument in the Tradingview chat. Um, and everybody's talking about support levels and drawing these weird charts, and I'm just shaking my head, um, considering. I mean, not trying to brag or anything, but yeah, I drew it. I pulled a short last night on Ape USD. Put it as a signal on TradingView, made money. I also put a long signal on Bitcoin a couple days ago. It didn't go as planned, but it did get high enough to where I was able to scalp and make money. So, either or, this has to do with specific levels that are on the chart, and I think people have the wrong idea about them, and that's what I'm going to talk about today. I'm not going to go through a long intro. I just want to show you the thumbnail. That's all I want to show you is the thumbnail. But I don't have it ready, so you're just going to have to see the thumbnail anyway whenever it comes out. So good for you. You don't have to go through like a whole weird intro and all that stuff. We're just going to go straight to the charts and talk about it, okay? All right. So here we are looking at Bitcoin, and just because the whole market follows Bitcoin, I'm going to start with Bitcoin, right? So this is I believe it's the daily. Yes, this is the daily chart for Bitcoin. All right. So when we look at the daily chart for Bitcoin, everybody keeps talking about bull market and how this is a very bad bull market. No, we're not in a bull market. If you look at last summer's lows, I have them right here outlined. They touched not one, not two, but three times. I've talked about this before. This is a monthly fair value gap, right? Which means that between 2 months, which was, I think this was the month of January, I want to say. So the month of January was going up, and between on each side would have been December, and above here would have been November, right? Or maybe this, I don't know. Let me see here. This also is, yeah, this makes sense. So that's why this is considered a January fair value gap, because it happened in the month of January. Even though right here, even in the daily, it's showing January coming down and filling that area, it doesn't matter, right? Because after the month was over, it stopped right at pretty much where the block starts. So if I go to the monthly, I will just show you really quick. I know there's a lot of notes on my charts, so please forgive me, because this is how I draw my charts. There's no lines or wedges or anything like that. We do not believe in that kind of stuff in smart money. Charts do not know what kind of shapes they are making, right? So they're not going to know how to get out of a wedge, or they're not going to know what, hey, I'm making a flag, I should do this. Charts don't know that. Charts know price points, right? They know imbalances. They know where they've left an imbalance that they need to come back and try to fill. That's what they like to do. And smart money price likes to do pretty much two things, right? It looks to fill imbalances, right, for one. Number two, wrong finger. Number two, it looks for liquidity, right? And liquidity is where traders will have their their trade points set, their shorts, their longs, where they're going to open their trades, the limits, basically. That's where liquidity is now. Where is that typically? Areas like this, where you see three lows touching, right? People are thinking, oh, that's a safe support point. That's a strong support point. Not when it gets back to it. It won't be. If it gets back to it. If it gets back to it. It won't be. Okay? So, that's a fine point to make, to be honest. So I'm going to go back from monthly. I'm going to go backwards. So monthly here, you see all the fair value gaps on the monthly basis. You can see that we have 1, 2, 3 major fair value gaps on the monthly basis. Now, the thing is that prior to this, your high, right? Your high was probably about $20,000, near $20,000. All right. The thing is that most imbalances get filled. They don't have to. Honestly, they don't have to. They really don't have to. This actual monthly imbalance is not correct. I need to move that over just a little bit. Okay. So this would be the monthly imbalance for the month of December. Right, so this is the month of December. On one side is November, on the other side is January. So December, we have a full imbalance with nothing coming back into it. This is what not that I'm worried about it, because I was kind of expecting this, but this is the area that I think that Bitcoin is possible to go to next, right? Now, anything below 20,000, I'm not worried about. Why? Because we've already been there. And also, we've probably already, consolidated in these areas, such as right here, right? This is a monthly fair value. This is a monthly chart, by the way. So these two wicks could have taken weeks, days, whatever to stay in this area. So since they've already been in this area, if you look to your right, you have a monthly fair value gap. Well, since price jumped up above that, this area doesn't technically need to be filled, because it's not really an imbalance, because the price has been filled over here, right? Okay. So that brings me to what's happening today, or what has been happening recently, I should say. What I've learned in using smart money on the crypto markets is that there are wild swings. Price has a tendency to be wild, to be honest. I've not treated it like the stock market, right? I'm not hodling. Right, a coin. I'm not holding a coin thinking, oh my God, this thing's going to 20x any day. That scenario has come and gone, right? The only coin I was able to ride that train on was Solana. I got lucky. I got in Solana when it was $15, $20, I don't know, $15, $20. Threw in $100 at it. And I remember selling 2 coins whenever it got around 112, and then I remember selling the rest of it off whenever it got to around 150. And if you watched my videos, you heard me tell this story before. I smacked myself in the head now because I got up to 200, but look at it now. Solana's at like 98. If I would have held on to that, I would still be up, but not as up as I would if I would have sold. So now I just do futures, right? And or margin. It's pretty much the same thing. Margin just gives you more money, so that way you can make money faster, right? You said the only thing is that you just got to pay the money that you borrowed back. As long as you know you're going, you can pay that back. Futures allows you leverage, which is basically like having more money, right? And they, you say you're going to put up this much, and it acts like you have, if you put 8x margin, or 8x leverage, it acts like you have 8 times the amount of money you have, and it'll move based upon that amount, that's put forth. So, that being said, I do not hodl. I do not really invest. I mean, I have. I'm still on Trader Joe. I got some things, in some AVAX pools. Yeah, I really believe in MetaStyle. I think Andromeda or Andromeda, whatever you want to call it, however you pronounce it, I think is going to be a cool layer two. And I think layer two coins are what we should be looking at because they're going to be what is next as far as how the crypto whole ecosystem is going to be operating with each other, right? So I think layer two coins are the most important. Other coins definitely have some kind of, if they have some kind of utility, usability, they're definitely important as well. I'm just not a fan of meme coins, anything like that. The only one that I have played with and traded and profited off of has been ApeCoin. And I don't know if I'd consider that a meme coin. Just the Bored Ape Yacht Club created their own coin. Hey, good for them, man. That's cool. And it got really high. It dropped a lot recently. I made, a profit off their drop last night, but whatever. That's neither here nor there. I'm here to talk about the support points, right? The support levels that people always talk about and why I think they get it wrong. And it has to do with this smart money theory, right? So I was mentored by Inner Circle Trader, and everything that I was taught was basically taught via Forex or via indices or indices futures, right? And they both acted different, right? But they acted different based upon time. That was the only thing they acted different upon. Everything else was the same. The order blocks, the fair value gaps, the rejection blocks, the breakage structure, all that stuff acted similar. The only difference was time and time of day, I should say. Now we're getting. Looking at Bitcoin, and we see this huge rise, right? At the very beginning of 2021, and we think this thing is just going to go parabolic. I did not think so at all. Whenever it got to February, that is when I knew we were going to see something. Not something bad. I just knew that it was going to drop. Eventually, right? So February runs up. You can see it drops back down, runs up again, and then we see this mad drop down to the bottom, and it stays here. And man, if you were trading at this time, you knew how heartbroken people were, and people thought it was the end of the world. At this time, was I learning smart money? Yes. Trying to think. Yes, all of 2021, I was enrolled in ICT's Smart Money Mentorship Program. So, I had started understanding, ICT back in September of 2020. So, but I didn't get into his program until January. So I had a good 4 months of trying to understand this smart money thing before I get into this program, and then after that I got into this program. And to be honest, I'm still not the best at it, but I feel like I'm the only person that's trying to implement this in crypto, right? Nobody's implementing this in crypto. Everybody's still talking about it's still traditional wedges and trend lines and things like that. That is some old school thinking. That is the thinking that the institutions want you to believe. They want you to believe it because it's taught by them. And because it's taught by them, they know how to trade against you. It's that simple. So they know how you're going to trade, so they do the opposite. Okay? How does that affect support levels? All right, so support levels are not levels to where you have the same area bouncing off multiple times. That's not a support level like this level here. No. That is the filling of an imbalance that the chart left, right? And so because it did fill the imbalance, then it was like, okay, it is time to move on, right? And you'll find imbalances all the time. And in fact, I still have some of them laid out through here. Right now, we are coming back down toward that imbalance. But do I believe we're going to actually get to that imbalance? Possibly. Possibly we are going to get down into this imbalance down here. Right? Now, the thing is that we shouldn't get any lower than that imbalance, or close lower than that imbalance, I should say. And you can see here on this one, it did drop below that imbalance, right? But it never closed below the imbalance. Now, it can close in the imbalance. That's perfectly fine. But it should not close below the imbalance. If it closes below the imbalance, that's when you know you have a really bearish structure. But right now, if you're looking at this chart from afar on a monthly basis, this thing is still going up. So I don't know where this bearish chart thing is coming from on Bitcoin. It just absolutely just shocks me, because you have to understand what's happening in the market. Not really what's happening in the market, what's happening with the candles. Basically, you have to learn how to read the candles, and once you can learn how to do that, you're perfectly fine. So yes, there is a possibility that price can come all the way down to about the $20,000, what is the 600 mark? Let me see what the coordinates are. $20,000 and 577. So yeah, when it's round up, it's 20,600. It can possibly get down to there. Now, there is a thing that we do have when we talk about smart money, and it has to do with the median of the imbalance. Now, the median of the imbalance is called consequential. It says, I don't know why he called it this, but he calls it consequential encroachment. So if I put a fib from that whole box I just made and then split it in half, you see that is your consequential encroachment. Now, what can happen, what typically happens whenever you do have an imbalance, if it doesn't fill it all the way, it may only reach halfway. And whenever this is why you always hear me talk about halfway points, because they are instrumental in trading. So it could just come all the way down to the halfway point and then bounce up. Now that halfway point would be about 24,100. Okay. And just above that halfway point, we do have another fair value gap. And I believe that may be a daily. I'm not for sure. Let me go back to the daily and let's look at that, where that box comes from, because I forgot to label it. Sorry guys, I'm really bad about labeling things sometimes. Now, if you want to, I have started using this new indicator. I think I talked about it in my last video. If you want to use smart money indicators, this is the best one that I have found, just because this thing labels the charts the way I label them. And it's called Super Order Blocks / FVG, which means fair value gap, which is these boxes that I'm talking about, / BOS, which means break of structure, tools by, if I butcher your name, dude, I'm sorry, Makuchaku and FA. Thank God for those guys for coding this, because I read that code and I was like, I can code decently, but there's no way I could have coded that. So this thing is absolutely awesome. What you can do is it shows you, where premiums start, where the discounts start, and I'll talk about those too. The pivot tops, pivot bottoms. What I like to do with the pivots actually is use the step line, because then it kind of almost gives like an outline of where this chart is going. What I like to do with these, the premiums, I like to leave these, these two the same, premium discount, the premium 1 as an X, and then what I'll do is discount 1 as a cross, just so they're all different. Okay. Now, what does that mean? Usually when it's a premium or any kind of premium, it means it's going to sell, right? If it's at a discount, it's going to buy. And as you can see, look, discount, it bought. Discount, it bought. Premium, it sold. But it sold, but it bought after that. This one definitely sold off at this premium. And I'll show you what a premium is just really quick, just so you understand what a premium is. Now, a premium is when you take a fib, right? And I'm going to think about this for a second. This is consolidation. Hold on. I may have to do this a couple times. No, this is perfect. Actually, this is perfect. I may have done this right on the first time. Let me put the array or the magnet on so I know I'm at the right spot. Okay. Oops. Yeah. Okay. Yeah, this would be perfect. So, what a premium is that if the bias is bearish, right, and how you form a bias, that's a whole different discussion altogether that I may have to try to have. That's not going to be in this discussion, but you need to form a bias, right? That way, because if you don't form a bias, then how are you going to know how to trade? You have to be confident in your bias. If you're wrong in your bias and you trade incorrectly, close your trade, get out of the way, rethink your analysis, and then start over, right? Don't try to jump in and try to save the money that you lost just because your bias was off. You're going to end up losing more money, and you're going to kick yourself in the butt for doing it. Believe me, I've done it before. In my year of losing money, that's what I used to do, because I didn't understand bias. I didn't understand anything like that because I hadn't gone through what I had went through. I was just trying to follow the chart, not realizing that the charts are manipulated. Yes, Bitcoin is manipulated, 100%, easily manipulated. So this being a premium, what that means is that, okay, you have this part of the wave, right? All right, so whatever, well, actually, it would have been here. And considering I'm on a daily, I don't, okay, this makes even more sense. Considering I'm on a daily, I don't like using the wicks, right? Wicks could mean run on liquidity. It can mean a whole topic of things. But what you have is you have a consolidation, right through here. And then all of a sudden, boom, it drops. And when it drops, that is when you have a break of structure, right? And whenever you have a break of structure, that's when you pull your fib. Right, you pull your fib from the top to the bottom, and then whenever it pulls back up to the 61.8%, that right there is your discount, or your premium, I should say, your premium. The opposite way is the discount, sorry. That is when you have your premium. So this thing pulls right up to the 61.8% and then drops like a fly. It's sold at the premium, right? Meaning that it was at the price point that was high enough for institutional investors to want to sell. And what did they do? They sold. And if you're wondering why this candle is a different color than the other candles, it's because this indicator also will indicate high volume candles. So I colored them the way I wanted to color them, a brighter color so I could tell which candle they were. So this tells me, this big drop off, this tells me that institutions were in the room at that time. They had limits, right? I mean, this is a daily, and this is what they usually operate off of, is a daily chart, 4-hour chart, sometimes weekly, but generally it's a daily. So they probably had the same setup that I'm having here right now, and they say, okay, as soon as it gets up to the premium, sell off, right? And they probably had a limit, and they probably just released the hounds as soon as it hit that limit. So you can see, as soon as it hit that premium, boom, sold off like a madman. And so whenever it sold off, guess who sold off with it? Me and you. What's called retail traders, right? We don't have the pocketbooks they have, right? So we started selling off with them. So whoever, and here's the thing, is that you see, even though it drops, you see a lot of people probably start buying in this area. Why? Because you see it start rising up here. Now this is where I actually put a long, whenever I said I longed, Bitcoin recently, this is where I did it. I longed it here, but I had a very short take profit. And that take profit was right underneath this. I don't know why. Well, I do know why, but it was right underneath this bearish candle. I didn't think it was going to get any higher than that. I didn't put this fib on it or anything like that. The reason I'm putting this fib on it here right now, and it is because I saw the triangle. I knew that was the premium, and I just kind of put 2 and 2 together, figured it out. But whenever it came down here, I knew it was going to at least long, but I just didn't know for how long, so I didn't give it that much room. And it went from, I think I came in at 36,000. Which is way down here. No, that doesn't make any sense. Maybe it was 37 is what I put it on. I can't remember. 37,000, and I know I had closed it out at around, yeah, it was probably around 39, 37, 39. I knew it was about a $2,000 difference. That's all I know. Okay, so now it drops, and it drops down into this fair value gap, right? Once it gets to the bottom of the fair value gap, that's when you should start expecting some kind of retracement. However, it may not retrace all the way up to where you want it to. What you want to do is you want to look to the left on the chart. This is what you should always do. You should not be doing this, right? You should not be taking what is immediately in front of you and doing something like this, right? And going, oh, here's a trend line down. So, therefore, now that we got the trend line, and also we have a trend line that's going this way, right at that intersection, which would be right here, pretty much, then you're going to start thinking, I'm going to buy right there. And that's, where it's going to turn around. No, don't. Stop. Because trend lines don't exist. We call them phantom trend lines. Literally call them phantom trend lines because they're phantom. They're not real. They're there to cause you confusion. They're there to make you think that price is going to go a certain direction when it's more than likely not. Because as you can see, it went through both of these trend lines, right? So whoever thought that this trend line idea and following it and trading off of it is a good idea, not so much, because it will be there to screw you over every day. Now, what you should be looking at as far as support, right, will be fair value gaps and order blocks, right? So that's where I'm bringing you to next, right? And right here, right, we have a 4-hour fair value gap. Now, as you can see, last summer, around January, last January, this January, I should say, we got as low as dipping into this 4-hour fair value gap, about halfway. Okay. And then it decided to move on up, made a higher high, and then we even broke structure, right? So this is the good thing about this, right? This is why I am kind of skeptical about possibly moving down into this area that has this imbalance, right? Is because we have already, and I'm talking about in a daily area, that we have broken structure, meaning that you had a high here, and actually I should probably get rid of some of this stuff. And my hand is asleep. My hand is on the mouse, which is way over here. Okay. And almost all this stuff over here I can probably delete. But I'm going to leave this up here because this is very important. This I can probably, I don't know, I'm going to leave that there. Equal highs equals liquidity. You can see equal highs right through here. So this will be an area that it will eventually try to attack. But that's going to be in the future because that's around 44,000. All right. So when we think about support, I think about where the last low was, right? So the last low that was lower than we currently are is halfway through the fair value gap of what was created. This may be over my head, so I'm going to put this up here. That was created last summer, right? So all this last summer, right, this all filled up this monthly fair value gap. So that's why this monthly fair value gap, what I like to do, even though it's still, I have it pushed over here, I want to push it over here. Why? It's been fooled. It's the imbalance of the fair value gap is now balanced, right? Okay. But at the bottom of this fair value gap is a bullish order block. on the daily. Now, what is a bullish order block? A bullish order block is when you have basically bearish candles, at the bottom of a chart, at the reversal of a chart almost. And then your bullish candles take, I hate to say engulfing because it's not really engulfing, but they close above it, right? They close above the bearish candles opens, right? Has nothing to do with the wicks. Nothing to do with the wicks at all. Okay. Just so I wanted to make that clear. So your daily bullish order block would be where I drew this square, or this rectangle, I mean. And it would go from it should actually go from wick to wick. However, more than likely, the fair value, the bullish order blocks happen within the body of the candle, right? So there is a possibility that if it does get into this fair value gap and it goes right, more than likely, if it is going to get to this fair value gap, right, it's going to go through it. How do I know that? Well, it's because on the earlier, whenever it got into it, it only got into about halfway to it, and it's going to end up bounced out. So what happens with fair value gaps is usually whenever they return, they will go through it, hit another key point, and then come back to that fair value gap and then consolidate in it. Just like this one, right? Even though this was a monthly, it came down into it, it left, but then it came back to it and then filled it up and then left. So that's what I think would happen to this one if it were to drop and then get down to the bullish order block. And again, bullish order block, it should not get to the bottom. But this area, right? This area would be your support. Not a single line. There's not like a line that's going to be distinct that is going to be a support line, okay? There's going to be an area, right? And the reason that there is an area is because of the implications of the bullish order block. Now, the whole point of the bullish order block that was explained to me was that, and I want to see if this is a high volume. I think it was a high volume candle on the weekly, if I'm not mistaken. But the whole point is that the institutions will drop this thing like a hammer, right? And so they get other retail traders to drop with it, to sell with it. And then once it gets to the bottom of the imbalance, that is where the algorithm will pick it, will find it, and it will turn it around. So they know exactly where it's going to turn around at. So they might as well just drop everything that they have, right? Get a better price, and as soon as that price is lowered, buy it right back up 20 times, right? And then boom, it goes the opposite way. Now the thing is that what I have heard, what I've been told, is that because that happens, they are still holding on to these shorts. So what has to happen? It has to come back down into the area to where they will release those shorts and break even. Now, it doesn't have to happen because right now they probably have made so much money on the long, from here to the new high, that they don't have to get all the way back down to the bullish order block to, they can let it go right here, right? Lose a couple grand or whatever that they have and be fine with making the $200,000 that they made going up, right? Makes sense? Okay. But if it does drop through and it hits the bullish order block, right, and it does drop through that, and we close below that, then we're definitely going into this area, right? And now this is your support area. Anywhere from between 27,500 to 2,500. I know that's a large support area, but that is your support area, right? Because technically it should not get any lower than this 20,500. So I guess if you wanted to draw a line and say, yes, this is the line, then that would be the line, would be 20,500. That would be the line technically. However, considering there is another fair value gap here, the median of the fair value gap for the monthly is right here. I don't think it'll probably get any lower than this area here, which is about 24,000, right? It can, yes, it absolutely can, and it can even spike through if it wanted to, spike through really quick and pull back up, right? My concern is the closes. My concern is the weekly closes and the daily and the monthly closes, right? And where those occur. If they occur below a key level, such as right here, then we know we're going to this area, right? This imbalance right here, right? So this is what I'm looking at. I'm looking to see if we're going to close below last summer's lows, right? And if we are, then we'll be going into this imbalance. And that will be your support. Support can also be defined by breakers, right? Now, what a breaker is, this is a huge smart money lesson, by the way. So I hope you're paying attention, writing some of this down, because I usually don't do a ton of information about smart money all in one shot. All right. A breaker would be a scenario to where I see one now. Okay. So it's either a low, high, lower, low scenario or a high, low, higher, high scenario. And where your breaker would be depending on which scenario that is, which I see a high, low, higher, high scenario. That would mean that it would be your last down candle would be your breaker. So I'm going to draw a rectangle around this, and I am just going to put breaker and plus sign because that's a bullish breaker. So in the fact that it does somehow drop through the areas that I already have marked, the daily fair value gap, I think that's what this is. It may be a 4 hour, I'm not for sure. If it breaks the median of the monthly fair value gap, your next stop is going to be the breaker, right? And what it'll probably do, touch the top of it, bounce out, and who knows, that may be the last of it, and then start going the opposite way. It could touch the bottom of it, bounce out, hit the top or hit the bottom of this monthly fair value, or this whatever fair value gap this is. I can't know if it's a daily or a 4 hour. It could touch that, come back down to the bottom of the breaker, and then start going bullish again, right? So it can have a tendency to fill the breaker. Sometimes it doesn't. Sometimes it just wants to touch the top and turn the opposite way. It all depends on where we are in the week or where we are in the month. Why does that matter? Because candles have a tendency to have a kind of a systematic approach to forming a weekly candle or a monthly candle, right? And that approach would be, toward the end of the week, like we're having now. Guess what? All those drops. That was probably like, that's probably going to be wicks on your weekly candles, because most candles have wicks. So therefore, today we're probably going to see a rise in price. Well, earlier we probably saw a little bit of a rise in price. Let me see. Let me look at the weekly and see what happened. I may be completely wrong about this. Yeah, see, you had a little wick at the end. Not much. Not as big as these guys right here, that's for sure. But you did have a little wick at the end of the week, right? And now we're starting the week. It looks like it moved up just a little bit. And then now it's starting to look like it's starting to fade. And I think that reasoning is because if you're looking at a weekly, you see this candle right here, and it stops right about where the current candle's high is, the current weekly high is, which just started today, right? So it comes up to it. We call those, that would also be considered a breaker, and that's why it stopped there and turned around the opposite way. Why is it a breaker? We have a low, we have a high, low, higher high scenario, if you can see that, right? High is here, your lower low is here, and then it actually goes up, and the break happens higher than the previous week. So that's your high, low, higher high scenario. So it comes up, it touches the wick of that breaker right here, and now you can see it's probably going to start turning bearish again. I hate to tell you, but unfortunately, it's probably going to start turning bearish again, even though we have the fair value gap above it, and we have another fair value gap above it, and we have, see, these are all balanced here. And what I mean by balanced is that you don't have a fair value gap. Each candle is, it looks like I did some kind of, oh yeah, that was my long that I put in. That I made a scalp off of. I'm going to delete that. Each candle did not leave a body that was open for a fair value gap. However, it did not get any higher than the previous week either, except for, I think, this guy. I think this one is interesting. Okay. If it'll allow me to. So you're telling me that's the bottom of this candle, huh? Okay. Well, if that's the bottom of this candle, that's the bottom of this candle. I thought there would have been a wick on it, but there's not. Okay, so we have bottom of this candle. You go to this week, which is week of April 4th, right, to the week of April 11th, and you have this major fair value gap right here. This is definitely staying on my charts for a long, long time. Weekly FVG has in fair value gap. And there's also equal highs liquidity right here, almost halfway through this fair value gap. Let me see what halfway through what this fair value gap is. Right here. So I can already see that whenever it comes back up to this area, it's going to try to break those highs in liquidity, but it will probably get stopped at about halfway through, just because that is the tendency of the charts, what to do. They like to stop at halfway through fair value gaps, and then start pushing back or going up, depending on which direction you're going. So here, what I'm going to do, I'm going to draw this. Let me take off this and this candle. Pull back just a little bit right there. Pull it down. Okay. And then I'm going to put weekly median FVG. Oh, geez, God. Weekly median FVG. That works. All right, I have it over here. You can see it's roughly around 50%. All right, remove the fib. So, but that's going to be a while. That's going to be a while, and then whenever this returns. But I'm just saying, these are the kind of things that you should be thinking, you know, whenever price does return to this area. Draw out these large fair value gaps, know where the highs are, right? And then that way you can kind of understand where price might go. And you'll have a better understanding of what's going to happen. So what is going to happen now with Bitcoin? Good question. Two things could happen. And the one thing that I am optimistic about is that since we have came down and filled this monthly order block, right? Or sorry, not monthly order block, this monthly fair value gap. And right now we're on the weekly. The weekly order block is right here, right? This red candle, probably right above my head. The weekly candle is right here. There, where the weekly order block is right here. Now, as you can see, the price has come down into a 4-hour fair value gap, but is also almost the middle of the weekly fair value gap. Boom, right there. I mean, it is almost dead center as to where price came down in January. I mean, just below the middle of that, the body of the candle. We measure the bodies of the candle for these smart money ideas that we have, or ideas that have been presented to me anyway. So, that being said, since it has already come down into it, only at the halfway point and was rejected, right? Coming back down, it looks as like maybe the lowest point that we'll get is also the top of the daily fair value gap, the top of the 4-hour fair value gap, and maybe a little bit of an entrance into it before it takes off, before it starts getting bullish again. That what would be, we would call an institutional order flow entry drill, right? The institutions know once it enters a fair value gap that has not been completely filled, it may just do it again and then take off, just like it did here, right? But if somehow it does fall and get to the bottom of these fair value gaps and gets below this median and closes below the median, all right, be prepared for another drop, probably all the way down to this daily bullish order block, right? Here, hopefully we see a positive reaction. It may not happen. Again, what I'm worried about is this fair value gap down here that we have not entered yet, right? That is a monthly fair value gap that is above the 20,000 mark, which previously has not been broke. So now we have broke it. We have left a fair value gap, but price has not come back to try to enter the imbalance or fill the imbalance or do anything to the imbalance whatsoever. So that's the only thing that worries me. So if we're talking about levels and we're talking about, the support levels that everybody should be on the same page on, these are the levels that we should all be on the same page on, right? We should all be on the same page about this 4-hour fair value gap, and that price right now is at the top of a daily and a 4-hour fair value gap. And it could possibly just come down to it and then bounce off, right? Or come down into this area and then bounce away, right? Then that would be your support area. There's no like support line, magical support line, right? And this is also what smart money knows, is that people will put their buy limits around these kind of areas. And since they do that, with smart money, will drive it right down through the bottom of their stop loss so that they lose their money and it goes directly into the pockets of the institutions that have all the money. I know it's kind of a double-edged sword, but this is why you have to think like them in this kind of scenario, and this is why you have to chart like them. They do this, right? And their circle trader was on the pit floor back in the 80s. He knows how these people trade. He's been there. He's seen it. All right. And he devoted a lot of his life to trying to figure out why price did what it did. And that's how he came up with this smart money theory. Okay. And he used it for, indices futures for the longest time. And then he changed it to Forex because he liked Forex better because it's more volatile. You can get a lot more money quicker, things like that. I just want to bring it to the crypto world because nobody's using it in the crypto world, and it needs to be. It needs to be because I'm seeing so many people lose money just guessing or drawing these weird charts that don't make sense to me. And I know if you're watching this and you're new to this doesn't make sense to you, but believe me, if you follow this and you do this correctly, you will get it. And it will make sense. Because, okay, I'm not going to try to be, like, hey, look at me. This is Metis DAO, by the way. What I did is, with Metis, is that there are what we call, I guess you could say, invisible institutional areas or levels, right? And those levels are the 0, the 2, the 5, and the 8, right? So I drew a fib, and I drew the fib to the top, and I started it. Actually, this one I started at the 0 because I thought if there would be any kind of institutional level that this would possibly start at, it would be at the 0 or the 20, right? So I started at the 0. And if you start at the 0, you can see where I got my entrance at that 61%. Now, it shouldn't get any lower than 80%. 80% is where you usually see a lot of reactions, unless the institutions are really trying to fake some people out. So, I mean, right here you can see it's getting close to the 80%, but it doesn't. It still might, though. It still might. I don't know. I like MetaStyle. I like what it's doing for layer 2 coins. And it's probably one of the only ones that I've actually went out of my way and went through the whole bridging, different coins and all that stuff just to buy, MetaStyle on NetSwap. Because I think it eventually will go up, even though it started at what, $100. Jesus Christ, this thing started at $100. But yeah, but anyways, the whole reason I even came to this tab in the first place was to go to my profile and gonna show you a trade I made last night. It was called Ape and Your Fib Matters. Right, so price at premium to sell. I explained to you what a premium was, and I saw what was happening at the ape chart, and couldn't help but be like, I gotta take advantage of this. So that's the thing, is that whenever I do a chart, I start writing, and by the time I'm done writing, like it's already inside my, my zone. But and also what I did, and I do want to mention this, is if you can see here on this chart, I had actually moved the fib to a different level. So before, whenever it started, it was somewhere over here, something like that. I had moved it up here, right? Above the 1250, I think. What do you think? No, above the 1230. Because I want to say it was below that. Yeah, it was at 1223. So I moved it to right here. And the reason I moved it to right here was because this is where it consolidated, right? For, I think these is this the 15 minute? Yeah, this is the 15 minute. Either way, it consolidated for about an hour. And after that consolidation is when it dropped. So that's why I moved the fib to right there, was because the consolidation happened and then dropped. I didn't want to put it at a candle to where it was already dropping. That makes no sense. You got to put it at the candle to where it was before it made its big drop. So if you get to my, I think it's even this one. Yeah, because this one says 1233, and I think somewhere I tell people to say, move your uh, stop loss to 1236. So whenever you hit play on this, it looks like I got out, right? So I'm gonna move this back over. So it actually looks like I got out. But because I read what was happening during this trade, right here was where I put the top of the fib, and then I allowed for a little bit more room, and I said, put your fib at 1236, or put your stop loss at 1236, which would be right around here, a little bit higher. So therefore, I did not get out. Luckily I caught that, made sure I understood where the fib was, right? So the fib is going to be at that area. It's not going to be way up here, right? That would be, sorry, but that would be a noob move, because you didn't see this right here. You didn't see the up, right? And that's why I drew this. So that's why I drew this up going down and then back up, because the up move is where the fib came from. right? So, even though it was falling, it stopped and it moved back up and then it dropped again. Now that's exactly where you should put your fib, is where it kind of drops again. Okay. So, as you can see, boom, I nailed that trade and even more. I said I was going to aim for the 150, which I did, right? And I was, unfortunately, I was sleeping at 9 this morning, but it took off 80% of my trade at 9 this morning, and then I let it keep going. That 20% of it, I let it keep going. I was at my Mother's Day brunch whenever I closed out my trade, right around in here, around 12. It was, I think I was supposed to be there, or no, right around, my parents came pick me up around 12:30. Because we had to be there at 1:30. So it was right before they came pick me up, right around here. I closed out the rest of the trade. I want to say it was at 11.15 or something like that, $11.15. Yeah, it was, because it was at the 127. That's what I was aiming for. So it was at 11.15 where I closed out the last 20% of my trade. So, and I'll even I even explain, I think, somewhere in here how I was going to do it. Here's me explaining, hey, move your fib. After getting a good look at 1190, it is appearing bullish. Chart to trace at 80%, meaning that it should probably get up to about the 80% mark before it starts to fall, before a negative reaction occurs. It hits 2 bearish order blocks and did not even think about closing above that, and it didn't. And you can see here is a premium, and then you have a premium here. So there's premiums all over the place, which means that's kind of like the area to where it would sell. And even though it did get all the way up here, I'm glad I said move your fib to 1236, especially whenever I'm showing it right through here, right? And so I already pulled my fib back up to 1233 and allowed for even a little bit more room to say, hey, 1236 is where you should have your stop loss. And so, that being said, here we go. I also talked about there being equal lows. There was equal lows right through here. So I drew that line all the way across. And I said, hey, that's sell side liquidity. A lot of people are going to see that as, guess what? Support. Like I said, what did it do? It punched down through that support, and it looked like it was starting to go back up. And I said, I'm waiting on it to drop to the second. Where did I put? Okay, so here's where I talk about how much I'm going to take off and things like that. See, it broke sell side liquidity. Now it's time to break the second. I'm aiming for the 127 extension. Yeah, okay, hold on. Let me see here. Okay, maybe this is it. I have to get in for marker on current wave. Pressure blocked anything about closing. Okay. Okay, yeah. So here I see the price attacking sell side liquidity and the equal lows and continuing lower now. That's what I put. That's what I wrote last night, 19 hours ago. And what I meant by that was these lower lows. I didn't put it in that. Unfortunately, I didn't show it in that chart, but I was hoping everybody would look at the chart and understand what I was talking about. So it did break that. And I could have swore I put something about I'm waiting for it to break even lower than that. Either way, okay, I'm not going to take up too much of your time. But either way, this trade went well. And it went well because of smart money principles, and it went well because of support levels that I knew were there, right? And that was Ape USD. That was that. It wasn't even Bitcoin. But it was because of support levels that I knew were there, and that I knew that I could work with, right? So when it comes to support levels, these are areas that you work with. It's not a black and white line, right? It's an area that you work with. Okay. And what you have to think about whenever it comes to these support levels is wicking it on a daily level or wicking it on a weekly level, because a lot of people can say, oh my God, it's going to drop below 20,000. Well, that doesn't mean crap. Yeah, if it's Wednesday and it drops below 20,000, who cares if it comes back up the next day and Friday we have a close at 27,000 or 22,500. What matters is the close, right? And that's what I'm trying to get at, because that is where the bulk of where the trading happens, is in the candle, in the actual candle itself, not the wicks, right? The wicks just tell you where, if it's either trying to break liquidity or if smart money's trying to sell off really quick and then buy up again. That is not where the bulk of the trading happens, right? The bulk of the trading happens during the candles. So that's where you should pay attention and to the bulk of these candles, right? Within these these main areas. Sorry to cough. Within these main areas that I've been talking about, such as a fair value gap, a breaker, or an order block, right? That's what you have to look for. Okay. That being said, what am I on? I'm on a weekly. I see another weekly order block, and actually with this new indicator that I have, right? You can actually go to the inputs, and then you can find order blocks. You can find fair value gaps, right? So if I wanted to say, okay, here's a fair value gap, and you wanted to distinguish it from something else, you can. So I'm going to put it bright blue, right? And then I'm also going to put the fair value gap, the bearish fair value gap. Actually, that's not a bad color. Let's make it a little bit darker. How about that? And box transparency. So they kind of have it transparent, so it's a little bit harder to see. So I'm going to put 70. And as soon as I do that, boom, there you see it. You just saw that fair value gap. So that's what I was about to draw. All right. And I think they put a limit on how many bars it goes over. You can go into the code and change it to how many bars it goes over. I've done that before. It's pretty simple, and then you just resave. But you can resave it as a different name or whatever. You don't have to publish it. You can just save it, so that you have it for your own. So that's what I'll do. I'll go to these fair value gaps, these order blocks. I'll make them a little bit darker. That way, basically, it looks like a chart that I had made. You know what I'm saying? So instead, I'll do rectangle. Boom, all the way across. Oops, actually, it was down here. Yep. So that is the fair value gap. It did have already drawn out as a weekly, right? And so now I have another weekly fair value gap. So I'm going to put that there. Fiji weekly. And wiggly. Take a jiggle weekly. Okay, so now we have a monthly fair value gap, you have a breaker, you have a 4-hour fair value gap, you have a weekly fair value. And I know all these overlapping can be confusing to people, but believe me, they won't be whenever price gets to them. Because price will hit each and every one of these, and there will be a reaction off each and every one of these. Believe me. So, as to where we are at now, what do I believe? I currently believe that, yes, we will probably break lower and possibly fill. I mean, even though this is a weekly, the one thing I hate about the whole smart money idea, it's not really that I hate, but that it primarily comes true, is that when you have a large time frame, such as a weekly, you will usually see something happen with a larger time frame, right? So that's why I'm kind of worried about it falling back down into this fair value gap down here, which also broke below the lows of last summer. It could easily do that. And I'm not that I'm worried it might, but I'm prepared if it does. Because now you have a whole lot of wiggle room to work with your kind of support levels. Because each of these are going to be a support level, right? So you're going to have this right here as a support level. It's going to bounce off this. It could drop down even further, bounce off this, pull up, drop down even further, bounce off this, pull up, drop down even further, bounce off this, pull up, pull down even further, bounce off this. But this should be your very last point, because it is the last one before we broke the previous high. All right. I hope this all made sense to you. I really do. I hope you were able to understand this, and how I do my charts, and what makes sense to me, and what has made sense to me, what has made me money consistently over, I can't tell how long. The thing is that 90% of traders fail, right? Or at least lose money. I wouldn't say fail, but lose money. And the reason they lose money is because they're constantly following the same kind of technical analysis that they've been taught. Drawing wedges, drawing Elliott wave, drawing, harmonics, whatever. And it makes me face palm, because price doesn't know that it's doing that. Price doesn't know that it's making an Elliott wave. Elliott just, stumbled across this thing that, hey, waves happen to form like this. That's cool, but also they don't. I've seen plenty of waves that don't form like that. And with harmonics, geez, the only way harmonics work, I have found, is in areas like this, right? So to where you would have here, let me draw a harmonic out of this. How about that? Let's do it. A, B, or sorry, XA, B, C, D. There you go. Kind of not really, but yeah, maybe more like this. XABCD. That's about the only way they work. Because then once it gets to the D point, boom, you can buy and it'll go up. It does not work in trending areas or anything like that. It just won't work. It won't work in reversal areas. Well, I guess that is kind of a reversal area, but what I mean by that is that if you have, your D point is up here, but it's already on reversal, and so it's telling you to sell, but it just keeps going up. I've seen that happen. And I fell victim to those kind of things and harmonics. So that's how I know harmonics don't always work. And anybody who has some kind of harmonic program that scans, the internet for all these different harmonics, and it's, they're foolproof, are lying through their teeth. Liars. So that's why I try to teach smart money, and I want people to really understand smart money, because it's literally the only type of trading system that does work, right? That being said, if you want to learn more from me, you want to learn more in a private kind of environment, I do have a signals group that I'm constantly showing people or talking to people about trades that are coming up, what we're looking at as far as setups. I'll give them the information. I will also continue to talk to them about if any kind of analysis might change. If it does, I'll say, either pull out, of what happened, or I'll say, hey, because last night, what happened was that I longed Ape at a certain point, because it was hitting a bullish order block. And then once I realized that it wasn't going to long there and it was going to short, I did a little bit more analysis. My analysis changed, and I was already $7 in the hole before, or I think it was $70 in the hole, something like that, before I turned around and said, okay, sell. And then, I think we were at like 35 lots or something like that. And I said, like, sell for 80. So that way we could, for one, get 5 more lots then to sell on. So the money would actually grow quicker as it was dropping. And I measured it out, and I had a specific area in mind, like I showed you. And we ended up winning that trade. So you can turn a losing trade into a winning trade as long as you can understand where these pivot points are, where these so-called support points, because there are kind of support points for us too, in smart money, and one of those, it would be a bullish order block. However, it can take the whole block to actually be support. So anyways, I was going to go over other charts for you guys. I was going to go over ETH. I was going to go over Ape. I was going to go over GMT. I was going to go over AVAX. I was going to go over Luna. I was going to go over FTM. But to be honest, I feel like I just needed to go over one chart and to describe to everybody who might be interested in smart money, who might be interested in, well, FTM's dropping pretty bad. Man, I've never seen FTM get below 50. Anyway, I wanted to kind of say, hey, you guys might be having these levels wrong, and here's the reasons why. And I hope you were able to understand that. If you were, let me know. If not, contact me and let me know. Put a comment in my video. Say, hey, man, I didn't understand this. You didn't explain it very well. Okay, cool. And I'll try to do better on my next video. But if you are interested in joining my school, I wouldn't say school, but my other people who are basically my mentees, people I've been, kind of training, hit me up, let me know. I got 2 people right now that are, they're used to playing crypto the stock market way, by buying it, hoping it grows and things like that. I've kind of got them around to trusting how to play the futures by teaching them smart money, right? And one of them, he has a small goal, $5 a day. Hey, $5 a day will add up. That'll add up quickly. If you do it consistently every day, and if you can find a setup every day, right? And usually I will find a setup every day, but it may just be a scalp, but hey, if you can pocket it, and you can pocket $1 or $2, one day, but the next day you find a really great setup and you end up pocketing, $50 to $150, even better. So I feel like I try to find a trade every day, whether it be a short, very, very short-lived trade, or if it ends up being to trade one of the trades of the century. That's just the way I like to trade. So that being said, I am going to leave you all the rest of the loan, for the night. Hopefully digest this information. Hope you got what you wanted to out of this. If not, reach out to me. Like I said, I have a private signals channel I can get you into. I do charge. It's not much, but I'm also on Core, which is QOOORE. However, I think you'd have to pay to follow me there because I am a 5-star trader there. That information I do include in my signals group, so they know the kind of information I'm giving out to people. Sometimes I'll give out freebies here on Tradingview, but ultimately what I'm trying to do is either trying to get a private small group of people that I can teach into this signals group, or if you want to join my locals, it's only $10 a month. I will also include you in that signals group, and then on Sundays and things like that, I'll also try to post a private lesson. If you want a one-on-one with me, things like that, I'm very, very open to all these ideas. I just want you to make money, and I want you to stop being manipulated by the large industry people that keep screwing with these prices. And I just want prosperity for all of us. That's basically it. I'm not saying that I'm the god of prosperity and I can bring that to everybody, but I definitely think I can help see things from a different perspective than most people can. Okay? But that's all I got. Thanks so much for watching. I know it's been a long video. And just remember to always wear your pants. Night, guys.